Hi, April.
Hi, Charles.
In your latest Calling the Shots report, you talked about the recent concerns surrounding the US banks and its impact on the markets globally. Could you briefly explain what's happening in the US?
Okay, so in the US, we saw the collapse of some banks. The first one being Silicon Valley Bank. The reason why it's significant is because it's the 16th largest bank in the US, and it's the largest bank to fail since the 2008 global financial crisis. So essentially, what happened was, first of all, SVB was heavily exposed to startups and some crypto companies, and these customers encountered difficulties. So, of course, their deposits were shrinking. Secondly, some depositors were also pulling out their money and shifting them to money market funds because interest rates in money market funds are going up. So because of those liquidity problems, SVB had to sell their mark-to-market securities or long-term bond holdings that they were initially planning to hold to maturity, and they had to book significant losses, necessitating them to raise capital. And since they couldn't do that, a lot of clients became worried and started pulling out their deposits, leading to a bank run. So regulators had to close SVB. And after that, of course, there was some contagion. Signature Bank was also closed by regulators, and Signature Bank is another bank that was considered to be friendly to crypto companies. So, and then of course, we know that a lot of other banks encountered problems. And because of the negative impact that would have on the economy and to equities, and other banks, of course, shares of banks and other US companies went down, and including, of course, other equities around the world.
So you're talking about bank runs. What are your expectations going forward? Do you expect more bank runs? And what are the regulators doing about it?
Yeah, I think initially, if you're a high net worth client and you have a lot of money and your money is, say, in a smaller regional bank, because of what happened to SVB, you'd probably, be a little bit more cautious, a little bit more scared, and because the initial deposit insurance is only $250,000, then probably what you would do is you would withdraw your excess cash and just potentially just place it in money market funds with higher yields and of course more protection. But that said, the good news is SVB happened on a Friday. Then on Sunday, right away, the regulators came out with two things. First of all, they said that all the depositors of SVB, even if you have more than $250,000 in the banks, you can withdraw them on Monday. So in other words, the insurance has increased, allowing depositors to have access to their money right away beyond the $250,000. And then the government also created the bank term funding program. So they will now be lending to depository institutions that suffer from liquidity pressures or potential bank runs, so that they won't have to close shop. So that's definitely good news, because the banks will not have to sell their long-term holdings of bonds and suffer from losses. They can at least just borrow money from the government and use their securities valued at par as collateral. So those are good news, and they should help reduce the likelihood of more banks collapsing. We could still see bank runs, but that should not lead to or that should significantly reduce the chances of another bank collapsing. I'm not saying it's impossible, but the chances have gone down significantly. And once depositors or the public realize that, hey, banks are not closing anyway because the regulators are helping them, then there will be more confidence and conditions should stabilize.
All right. The PSEi has also declined significantly the past week. Do you see these issues spilling over to the Philippines? Should we be worried?
Yeah, I think, the decline of the Philippine market and all global markets is more of a knee-jerk reaction. It's fund managers selling first, asking questions later, because we don't know what could happen. But upon more closer analysis, I think investors should not be worried about the Philippines. The likelihood of our banks collapsing is virtually non-existent. Well, first of all, because our banks are not exposed to startups and cryptocurrency companies, because those industries are very small in the Philippines. And our banks are also very liquid, with loans to deposit ratio of 65%, meaning only 65% of our deposits have been lent out. No? So banks can fund all those withdrawals from our depositors. And of course, if you look at the deposit base of our banks in the Philippines, there's a high portion of current account, savings account deposits. So according to BSP data, the CASA deposits account for around 78% of total deposits. And we know that these CASA deposits are stickier because they're in the banks because of liquidity requirements of the depositors and can be withdrawn anytime. Therefore, they're not very sensitive to rising interest rates. They will not be pulling out just because the T-bill rates are higher. Lastly, so we talked about banks being very liquid, not needing funding, etc. But assuming that they will need to sell their held to maturity bonds because of liquidity requirements, the potential impact on their capital is quite insignificant, because our team at CUL Financial looked at the unbooked losses based on held to maturity portfolios of banks as of end September and December, and the average is equivalent to around 11.4% of the capital base. So since our banks are highly capitalized, even if we factor that in, the total capital adequacy ratio of the listed banks would still be above the 10% minimum requirement of the BSP. So there won't be any requirement to, raise capital at any price for the bank. So our banks are quite strong. So I'm not really so worried about them.
Yeah, so I think it's obvious that our banks are not really in the same boat as the US troubled banks.
Yes.
Right. So what would your advice be for local investors at this point?
Okay, so earlier on this year, I think we talked about a recommended strategy. We said we're bullish, but at the same time, there were a lot of uncertainties, a lot of risks. So we told the clients to keep some dry powder. Well, I think the time is coming, and it will be soon, that you can deploy this dry powder, because a lot of stocks in the Philippines, even though they don't have problems, are being sold down. And it creates an opportunity for clients who have that extra cash to actually buy these shares at a much cheaper price. So that's the recommended strategy. I mean, let's wait for volatility to die down. And when that happens, it will be a good time to actually start bargain hunting or picking up shares of stocks, including the banks, of course, that have been sold down, even though there are no fundamental problems.
All right, well said. Thank you, April. There you have it, guys. If you want to stay updated with April's views on the market and also her stock picks, feel free to watch out for our Calling the Shots report, available on our website.